Yeah, good morning, traders. Chris Weston here, Head of Research at Pepperstone. We're coming into quarter end and month end, so that may have caused some distortions in markets. But if I look across asset markets today, it does seem that there's a bit of divergence playing through. Equities continue to push a little bit higher, led by the DAX, and also tech as well is looking pretty good. But on the other side, we're seeing in FX markets, the US dollar and certainly the Japanese yen outperforming. You could say there's a little bit of a risk-off vibe playing through. The Aussie dollar has been the worst performer there, followed by the Kiwi and some of the high beta emerging market currencies have fared poorly on the session as well. There's been really no move to speak of in the bond markets. You'd imagine probably in this kind of dynamic, you'd maybe see some more life coming through in the fixed income market, especially when you're seeing gold prices trading. We've got spot gold 1761 at the moment, so we've seen that a little bit lower on the session. Gold futures down about 1%, so to speak. Silver futures are down a touch. But the fact is we've got 10-year treasuries trading 1.46 at the moment, down 1 basis point. No real move to talk about. You go into sort of the shorter durations and there's been no real move. Break-even rates, the inflation expectations are pretty much unchanged, and real rates therefore unchanged on the session as well. We've got 10-year real rates trading negative 87 basis points, so no change. Certainly doesn't justify a 1% move down in the US dollar. In the gold price. If we have a look at what we've been seeing across the news flow, well, consumer confidence was very strong in the US. It hasn't really caused any gyrations in fixed income, as I say, and everyone's really focused on the manufacturing numbers in the US and some more specifically the payrolls number on Friday. That's going to be the big one. The Fed are telling us to look at it. We need to look at it. It could be one that could be a bit of a volatility event. Talking of volatility, we've got the VIX trading 16%. Up 0.26 of 1 vol, so not really a huge amount. We've got a 16 handle back again. Can we push back into 20%? Obviously, that's the focus there that we've been seeing. Okay, so let's have a look at equity markets. We've got the S&P, basically unchanged. I mean, if I have a look at the moves in various sectors, whereas tech's up 0.7% in terms of S&P subsectors, discretionary up 0.2%, healthcare pretty much unchanged, but the rest of the sectors are down. So we've got utilities at the bottom of the pack down 1.7%, energy's down 0.5%, we've got financials down 0.3%. I was expecting more of a bounce from financials, to be fair, in the cash session because, what we've been seeing in the buybacks and various factors there, but that hasn't really manifested out in any kind of great capacity. I do think that the bond market is a little bit mispriced at these levels. I think given the levels of expected growth that we're going to be seeing and inflation and various other factors, the fact that we're trading 146 on the 10-year probably should be trading about 180, but I think probably the market's just not prepared to put those trades on at the moment. So as soon as we do see a bit of a move higher in the bond market, you may see that rotation out of tech and these sort of momentum and movement juggernauts back into sort of value again, and you might see the Russell having a better bid. But yeah, S&P pretty much unchanged. If we continue to take a look at what's going on the NASDAQ, that continues to make higher highs. It's trending beautifully at the moment. This is one that we continue to like from the long side. The DAX has been the best performer on the session, up 0.9%. You can see we could just eyeing a break of this 15,800 level. Can we get there? There's a bit of supply coming into the market, but that's your obvious level that we need to look out for. But that's been your outperformer. If for people who do like a little bit spicy, a little bit more exotic, you like pairs trading, look at the DAX versus the FTSE. Whether you want to trade it FX hedged is one thing, but if you look at that as a pairs trade, the DAX is really nicely outperforming the FTSE at the moment. That could be an interesting trade. Let's have a look on the session because, as I say, we've seen the dollar outperforming. Let's have a look at the dollar index here. We've seen that disagreement or the lack of agreement, I suppose, between the market. We've seen people looking to sell rallies. We've seen people looking to buy those lows, but we've seen a bit of conviction from the bulls to push this one up into month end, into quarter end. It's not closing at its highs, but certainly that's something that we are looking. If we're going to see a continuation of this dollar strength playing through, then we'll probably look out whether it's going to be driven by higher bond markets. But that's something that we all look out. If that rate of change in the dollar picks up, that's going to have huge implications for markets. Let's have a look at that Aussie dollar move, because that was the worst performer in the sector. You can see that big range expansion playing through. Do we have the capabilities ahead of the RBA meeting next week to push down into those lows, 74, 76? Certainly a trade that we'll be watching out very closely. Again, a little bit of range expansion playing through in euro dollar. We're holding that 5-day exponential moving average. That's something until price can close back above that level. It does seem that for me that people will be looking to sell rallies in this cross. Let's have a look at dollar Swiss. We've got this really nice level of resistance playing through this ceiling. kind of no up to here, back down? Can we have a retest? We had the retest. The sellers have come through. Can we have another go and a close back above 92.28? That could be a trigger for a much better bid to play through. Dollar yen. We've seen dollar yen. I was expecting to see a continuation of this move, but we've seen this. We could probably take it down into a 4-hour chart and look for a channel, so to speak, there. But if that breaks through, then that would be the signal to go long dollar yen ahead of those payrolls numbers that we've been seeing. Dollar CAD was a trade we liked yesterday. That's had a really nice move up. And again, can this push higher? I suspect that that's going to be the case. I like to be long dollar CAD in that situation. Let's have a look at the commodity markets quickly. Let's have a look at gold, because we've seen it trade down into the 18th of June lows. Again, no real driver that we've been seeing. There's no real move in the fixed income market. Yeah, we've seen a stronger dollar playing through, and that may have weighed. But we've seen some support playing through. Prices traded through those lows, probably a bit of a stop run playing through. We've come back. We've just managed to hold on for dear life. That's something we are watching. This could really roll over at the moment. A bit of divergence playing through the RSI, but again, just a bit of weakness playing through in the gold market. Have a look at gold miners. We can see that the gold miner ETF is only down 1%, so equity is not going to be hit too badly on the back of that. And oil prices have seen a better bid. The interesting thing we talked about yesterday was this bearish outside day reversal. We haven't seen the follow through. We saw the move lower. The buyers have stepped in, and it's closed firmly below, back above that previous day's low. So that bearish outside day reversal has been negated. And that certainly the bulls will be looking at that ahead of the OPEC meeting this week as well. Let's have a quick look at crypto. Really strong moves playing through. That Bitcoin price has broken out of those highs that we talked about here. We think that there's probably a good chance this trade's now back up into the top end of the range. That said, for you Fibonacci heads out there, we can see this is traded into the 61.8% retracement level of that range, and it's sold off. So for really now, this is make or break time. We've had a really nice move up. We need to break through the 61.8% retracement level, and we'll get back into the top end of the range. So a bit of wood to chop in the short term in crypto markets. Let's have a look at Link, because we were looking at that one yesterday, just for a move down. We've broken through the downtrend. A break of this horizontal resistance level, and I think it's going to be moving higher. So something we are watching. So a nice bid back in cryptos. We've got to get through that 61.8 in Bitcoin prices. Not a huge amount of data to really focus on in the session ahead. Again, it continues to be all about non-farm payrolls and the positioning ahead of that.